I'm Tammy Wagner with Lakeshore Realty, a realtor here in Coeur d'Alene, Idaho. And I'm here with Suzanne Metzger, tax accountant with Magnuson McHugh, and Laura Young, lender with Mountain West Bank. And we're going to talk about the first-time homebuyer tax credit and the current homeowner tax credit. So thanks, ladies, for being here.
Thank you for inviting us.
Thank you. So the first thing we'll talk about, so the first-time homebuyer tax credit was $8,000. It's still $8,000, right?
Correct.
Still $8,000. Still, definition of a first-time homebuyer still the same?
Still the same. That has not changed at all. May not have had an interest in a principal residence for 3 years prior to the purchase closing date.
Or just never owned a home?
Or never owned a
Right.
home, but
Right.
go back
Okay.
3 years.
All right. And then, so are there any differences in this new $8,000 tax credit than the old $8,000?
Oh, and the $8,000, the biggest thing is that, of course, we've extended the time frame. It was going to expire on November 30th. Now we've got till April 30th. Or you can have a signed binding contract in place on April 30th. As long as the deal closes before June 30th, you're safe. The property has to have a purchase price less than $800,000. Although that's not going to affect too many people. People want to keep that in mind because $800,000 is a make or break limit. You either get the credit at $800,000 or you don't at $800,001. And then of course the income limits have been increased. So now you can make $125,000 as a single person and $225,000 as a married couple to qualify.
Okay, that's cool. So if someone had been, so short sales are a big deal right now, and I know and people were really trying to get them in before the tax credit expired. If someone had an offer on a short sale, but it hadn't been accepted yet, they'll still get the tax credit now as long as it closes, or as long as the bank accepts it by April 30th and it closes by June 30th, right?
Correct.
That's right. Okay.
Correct.
Cool.
Into 2010. Right now, the only thing that an offer date matters on is when it closes. So you could have had an offer pending since October, but as long as you're closing, you know, in December, maybe you had a hitch in the giddy up, so to speak, on your closing.
Right.
As long as your closing date is within this time frame, you're fine.
Right, so June 30th, 2010 now,
Yeah.
that's the date. Okay, cool.
That's it.
And then the IHA, there was a second mortgage available using that $8,000 tax credit, so that if you were taking out an FHA loan, you could get your down payment through a second mortgage using the tax credit as the basis. That's still available?
That is still available, that is correct. They will, IHA will provide up to, actually before they would only provide up to $7,000. At this point, they will provide up to $8,000 for a down payment, which has to be paid back before July 1st, 2010. So it'll give you time to file your tax returns, get that tax credit back to pay off that second mortgage.
Very cool. Okay, so that's the $8,000 tax credit. Now they've introduced a new $6,500 tax credit for current homeowners.
Yes, the $6,500 tax credit is a real, it's real initiative, was to spur the economy. And so if you look at somebody purchasing a home, on that date of purchase, if you go back 8 years, if any time in that 8 years, they had a 5-year block, so it could have been, you know, they've been renting for the last 3 years and then they decided to purchase again, but a 5-year block of principal residence home ownership within those 8 years, they qualify for the $6,500, and it doesn't have to be where they sell the residence they're in. So say somebody's looking at downsize and, you know, get into a condo and maybe turn their principal residence they currently have into a rental or an investment property,
cool.
second home. It's not contingent on selling the house you're in right now.
Right.
That's correct. It is
Right.
acceptable to keep your current home.
But it has to be a primary residence.
The new home you're going to get the tax credit on must be your primary residence.
Right, okay, very cool. And so, is it the same, it's the same then as the $8,000 where when they file their tax returns, they get $6,500 back? It's a real tax credit.
It is a real refundable tax credit.
Cool.
Key on the tax return filing now, though, is to remember Before it was optional to attach a copy of your settlement statement. Now it is required by the enactment of the extension bill, it is required to attach a copy of your settlement statement to your tax return.
Okay.
Yes, it must have closed, the loan, the contract must have closed to get that settlement statement.
Right, and so really filing electronically then is kind of out of the question. You can use TurboTax or whatever, but then you have to,
Well,
file
actually, no, it's not. There's actually a Form 8453, and we're presuming, the IRS hasn't issued this yet, but we're presuming there's an 8453, which is a replacement of what's called an 8879, two form numbers. The 8879 was simply a signature, and that went to your tax preparer, and that's what they kept. If you filed TurboTax at home alone, that just went in a drawer. You didn't really do anything with it, and you just sent in your electronic filing through TurboTax. If you're using a paper preparer, which is what I suggest most people do, of course, is that there would be what's called a Form 8453, and we simply submit that form, but also do an electronic filing as a
as backup or.
as a requirement to the IRS. But we know those rules, and we send it in, and we assume that they're going to add a checkbox for matching up to the form for the credit. We just attach a copy of the settlement statement to a one-page form that you've signed, and we mail it in as the preparing firm.
Got it, okay, that's great. And then in terms of financing now, there are still 100% financing programs available then, right?
There are two separate programs. If you're a qualified veteran, you could do 100% financing, zero down out of pocket. And then there are also, through the U.S. Department of Agriculture, in rural areas, there are still 100% financing programs available. Has to be in the more rural areas. You want to talk to a real estate agent or a lender to find out exactly where those areas are.
Right.
Now, Laura, on those, can somebody that's looking at that $6,500 credit, who may keep their initial home as a rental property, might they still qualify for those programs?
They will, as long as they certify that they will occupy that property as their primary residence.
Very cool. And then can they use the $6,500 tax credit as part of the down payment, or is that not introduced?
Yeah, actually, IHA is allowing for that as well.
Oh, okay.
Through their second mortgage program. Same rules apply, where it would have to be paid off before July 1st of 2010.
Okay, all right. And then credit scores. Is there a general rule on credit scores right now, or?
There really is. We as lenders right now are using 620 as a general credit score. There are certain areas where the credit score could be less than that if you've got some compensating factors and such. But you really want to, 620 makes it much easier and
Right.
less heartburn throughout the process.
Sounds good. Well, I think that's kind of the nuts and bolts of the tax credits. Certainly, oh, go ahead.
It definitely is. One of the things we do want to remind people is the same kind of scenario that we were looking at the beginning of 2009. We're looking at it at the beginning of 2010. Don't let this tax credit, the start of the year, deter you. You will always have the option of taking your 2009 tax return and declaring a sale in 2010, early 2010, as being part of your 2009 tax return. So you can close and get your tax return really quickly.
Right. So you can still do that amended tax return. That's great. Okay, so that's good. So what we're going to do is then we're going to post all of our contact information on our website so you can take a look, the video. If you have any questions at all, just contact one of us. We can help you with more details. All right, thanks guys for helping us out.
Thank you as always for inviting us, Tammy.
You bet.